In the grand theater of global trade, a new and transformative act is set to begin, one that could alter the very foundations of how the world moves its goods, connects its economies, and shapes its future. For centuries, the oceans have been the lifeblood of commerce, with shipping lanes weaving a complex web that links continents and cultures. But now, on the horizon, a project of unprecedented ambition is emerging, promising to rewrite the rules of maritime power and influence. At the heart of this seismic shift is China's audacious $50 billion plan to carve a new canal through the narrowest stretch of Southeast Asia, a feat of engineering that rivals the Panama and Suez canals in both scale and significance. The proposed Canal, slicing through southern Thailand, is more than just a shortcut. It's a strategic gambit that could change the balance of global trade for generations to come. This isn't merely an infrastructure project, it's a bold, visionary move to redraw the world's shipping map. Imagine a new artery for global commerce, one that could reroute thousands of ships each year, saving time, fuel, and billions of dollars. The implications for shipping companies, exporters, and entire economies are staggering. The proposed Canal aims to bypass the congested and increasingly vulnerable Strait of Malacca, a narrow passage that currently serves as a choke point for east-west trade. Every day, hundreds of vessels squeeze through this bottleneck, making it one of the busiest and most strategically sensitive waterways on the planet. By offering an alternative route, the Canal could dramatically ease congestion, reduce shipping times, and lower the risk of piracy or geopolitical disruption. In a world already rocked by supply chain crises, pandemic-induced delays, and rising geopolitical tensions, the opening of a new maritime corridor could send shockwaves through the global economy. It has the potential to reshape the flow of goods, shift the balance of power among nations, and redefine the very nature of international trade. The stakes are high, and the world is watching closely. In this chapter, we'll delve into the canal's historical context, tracing the dreams and ambitions that have swirled around this region for centuries. We'll examine China's motivations, economic, strategic, and political, and consider how this mega-project could ripple out to affect everything from global alliances to the price of everyday goods on supermarket shelves. The magnitude of this project is nothing short of breathtaking. As the world stands on the brink of a new maritime era, the Canal could become one of the defining undertakings of the 21st century, reshaping not just trade routes, but the very fabric of our interconnected world. To understand the canal's significance, consider the world's shipping routes, the arteries of global commerce. Choke points like Suez, Panama, and Malacca are shortcuts that save time and money, but they're also points of vulnerability. The 2021 Suez Canal blockage showed how a single incident can halt billions in trade. Most goods, like a smartphone assembled in Shenzhen, travel through these narrow passages to reach consumers worldwide. Disruptions anywhere along these routes ripple through the global economy, raising costs and causing delays. This reliance on a few key passages is both a marvel and a weakness. That's why nations like China are eager to secure alternative routes. In the past few years, the world of global shipping has been thrown into a relentless storm of uncertainty. What was once a highly coordinated, predictable network of trade routes has become a landscape marked by chaos and constant change. The ocean highways that connect continents now face disruptions at every turn, leaving shipping companies, exporters, and consumers alike struggling to adapt to a new reality. One of the most dramatic shocks came with the attacks in the Red Sea, a vital artery for global commerce. These attacks forced hundreds of ships to abandon the Suez Canal and take the much longer route around Africa's Cape of Good Hope. This detour not only absorbed 7% of the world's container shipping capacity, but also created massive bottlenecks, delayed deliveries, and sent freight rates skyrocketing to levels not seen in years. The ripple effects were felt across continents as supply chains stretched and costs soared. Meanwhile, the ongoing trade wars between the United States and China have added another layer of instability. Tariffs, retaliatory port fees, and shifting regulations have cost businesses billions of dollars, forcing companies to rethink their supply chains and sourcing strategies. The uncertainty has made it harder for businesses to plan ahead, and the threat of new restrictions always looms on the horizon. Even as ceasefires and trade truces occasionally offer glimmers of hope, the shipping industry remains on edge. Freight rates swing wildly from week to week, making it difficult for companies to budget or forecast. At the same time, overcapacity threatens to flood the market, as new ships ordered during the boom years now enter service just as demand becomes unpredictable. The result is a volatile market where fortunes can change overnight. The chaos doesn't end there. The aftershocks of the COVID-19 pandemic still reverberate through the industry. Ports that once bustled with activity have seen periods of eerie silence, with ships waiting offshore for days or even weeks. Abandoned containers pile up, and workers, masked and cautious, navigate a world where every new crisis seems to bring fresh challenges. The combined impact of conflict, tariffs, and pandemic disruptions has made global shipping not only unpredictable, but also far more expensive for everyone involved. Now, into this already turbulent scene comes China's ambitious proposal to build a canal through Thailand. This new route promises to reshape the map of global shipping, offering a shortcut that could bypass some of the world's most troubled waters. But with this promise comes a host of new risks: geopolitical tensions, environmental concerns, and the uncertainty of how existing trade routes will adapt. As the industry braces for yet another wave of upheaval, shipping companies and governments around the world are watching closely. The redrawing of the world's shipping map could bring both opportunity and danger, forcing everyone to rethink their strategies and prepare for the unknown. In this era of disrupted waters, China's canal could become a game changer, ushering in a new era of efficiency and connectivity. Or, it could introduce fresh instability to an industry already stretched to its limits. One thing is certain: the world of shipping is entering uncharted territory, and the journey ahead will be anything but smooth. China's Kra Canal plan is a strategic response to global shipping chaos. The vision: a 120-kilometer waterway across Thailand, bypassing the Malacca Strait and connecting the Pacific and Indian Oceans. Designed for the world's largest ships, the canal would take a decade to build and cost at least $50 billion. For China, it's about solving the Malacca dilemma, reducing reliance on a choke point vulnerable to blockade. The canal would anchor China's Belt and Road Initiative, tying Southeast Asia's economy closer to Beijing. It's not just infrastructure, it's a bid for regional influence and security. The Kra Canal would be a permanent symbol of China's rising power. Even before the canal, China has shown its ability to secure privileged shipping routes. While Western ships avoided the Red Sea due to attacks, Chinese vessels continued, leveraging diplomatic ties with Iran and the Houthis for safe passage. This gave Chinese exporters a major cost and speed advantage, especially in the electric vehicle market. The Red Sea Express is a real-world preview of the strategic value a China-controlled canal could offer. In a fragmented world, exclusive routes are a powerful asset, and China is proving it can carve them out. The proposed Kra Canal would do more than just alter shipping routes. It would fundamentally shake the geopolitical order in Southeast Asia and beyond. For centuries, the region's maritime arteries have been the lifeblood of global trade, with the Malacca Strait serving as a critical choke point for the movement of goods, energy, and resources between East and West. But the construction of a new canal across southern Thailand would redraw the map, creating new winners and losers on the world stage. The United States and its allies have long relied on the Malacca Strait as a linchpin for regional security and economic stability. American naval patrols, along with those of partner nations, have helped ensure the free flow of commerce and deterred piracy and conflict. But a Chinese-backed Kra Canal would challenge that dominance, offering Beijing a powerful new lever to shape the region's future and potentially sideline Western influence. The canal could create a stark divide in maritime access. On one side, the old vulnerable Malacca route, still crowded and exposed to disruption. On the other, a new Beijing-influenced shortcut, offering faster, safer passage for those aligned with China's interests. This new corridor would not only ease congestion, but also shift the balance of power, as shipping companies and nations weigh the risks and rewards of each route. With control over the canal, China could reward its allies with preferential access and lower fees, while penalizing rivals through delays or higher costs. The canal would become a potent tool of statecraft, allowing Beijing to project influence far beyond its shores and reshape the rules of maritime trade. Diplomatic relationships could be forged or fractured based on access to this vital waterway. For Thailand, the canal represents a double-edged sword. On one hand, it's an unprecedented economic opportunity, promising jobs, investment, and a place at the center of global commerce. On the other, it's a strategic risk, potentially making Thailand a pawn in the great power competition between China, the United States, and their respective allies. The country must navigate carefully, balancing the promise of prosperity with the dangers of entanglement in a new era of rivalry. For Singapore, the stakes are existential. The city-state's prosperity is built on its status as a global shipping hub, dependent on the steady flow of vessels through the Malacca Strait. A new canal could divert much of this traffic, threatening thousands of jobs and undermining Singapore's economic model. The government faces the daunting challenge of adapting to a future where its traditional advantages may no longer apply. The canal would cement China's influence in Southeast Asia, giving it a strategic foothold in the heart of the region and signaling a new era of contested power on the seas. Naval deployments, alliances, and trade patterns would all be reshaped as countries respond to the shifting balance and seek to protect their interests. The world's balance is shifting, and the Kra Canal is at the heart of this transformation. As nations maneuver for advantage, the choices made today will echo for generations, redefining the very nature of power, security, and prosperity in the 21st century. The Kra Canal's economic impact would be global and immediate. By cutting 100-200 kilometers off shipping routes, it could save days and hundreds of thousands of dollars per voyage. Thai ports would boom, while Singapore and Malaysia could lose significant business. Lower shipping costs could mean cheaper goods and more efficient supply chains worldwide. But with China financing and likely operating the canal, the benefits would tilt heavily toward Beijing. Thailand could face debt and dependency, echoing patterns seen in other Belt and Road projects. The canal's economic ripples would reshape global trade in China's image. Experts agree. If built, the Kra Canal would be a game-changer. It could unleash massive shipping capacity and alter global trade flows, but it's also fraught with risk. China's recent Red Sea maneuvering shows its strategic intent, turning influence into ownership. Critics question the canal's financial and environmental costs and whether it will ever be profitable. Some see it as inevitable in a new Cold War. Others doubt it will move beyond the drawing board. The canal's fate will depend on tolls, efficiency, and the geopolitical climate when, and if, it opens. China's canal proposal is a response to global fragility and a bold play for power. It promises efficiency and lower costs, but also new dependencies and deeper divisions. The project challenges the US-led order and signals a new era of competing trade routes. The Red Sea Express previewed what a China-controlled canal could mean for global commerce. Whether built soon or not, the ambition behind the canal is already reshaping global strategy. The question remains, can a new artery for trade unite the world, or will it deepen the fractures of our time?